Fab 4 Final Project by Annie Cox, Bharath Kangal, Peter Cook, and Rodney Irons. Board presentation. I'd like to start by thanking the board for their time. We appreciate you being here and are excited to share with you our success. Our team objective was to maximize net income and profit through efficient production. We strived for reduced cost and changeover with a goal of 85% efficiency. We produced 3 products: Original 1K and half K, Strawberry 1K and half K, and Nut half kilogram. At a cost of $167,000, the Fab 4 reduced setup time to 8 hours. This was a strategic decision, as 4 hours we saved every time we switched products, allowing us to produce an additional 3,500 units on days we produced more than one product. We'd established a stretch goal of 35% market share. Achieving a 35% market share would establish the Fab 4's brand value, create brand loyalty, and result in commanding a premium for our product. Financial and summary of results. In our first 6 quarters of business, the Fab 4 had a total sales volume of $12.7 million and a net income of over $3.9 million. Our gross margin was 53.1% with a net margin of 30.6%. We had a return on equity of 32.7%, and our team finished in 5th place in the simulation. One strategic and tactical decision our team decided upon was to have reduced setup time. We also felt, as a new company entering the market, that investing heavily on day one to increase capacity was not a sound business decision. We focused on our ability to adapt quickly to changes in the market, as well as switch up our product offering. Our product mix changed over time, as is seen in the pie charts to the right. They detail the percentages of products produced as well as products sold. Here we detail the Fab 4's market share. We have broken this down by our overall market share per product, and we compare it to our 6-quarter results. As you can see, we dominated the 1 kilogram strawberry market in the 6th quarter and overall. We started selling the half kilogram nut product late in the game and had tremendous success with this product. Selling the 1 kg and half kg original did not fare as well. The 1 kg original was decent, and the half kilogram did not sell well at all, and we plan on eliminating this from our inventory. Overall, our team fell short of our stretch goal of 35% market share. Sales forecast versus actual sales. For the board, we have broken down by quarter our results of the number of boxes forecasted and sold. The team forecasted a total of 3,177,113 units to be sold. At the close of quarter 6, we had sold 3,027,188 boxes of cereal. Our sales in units was over 95% of what was forecasted. Entering a market for the first time with a new product, we are ecstatic to be over 95% forecasted sales. We based our forecast for the 6th quarter on sales data from quarter number 5. With our 5th quarter sales, we increased our forecast for both half kilogram and 1 kilogram original, and reduced the forecast for half kg nut and 1 kg strawberry. At the close of quarter 6, we had higher sales of half kg nut, whereas the half kg original did not sell as well as anticipated. Our overall production was slowed this quarter due to increased changeover and setup time. We produced a total of 536,964 boxes, a 7% reduction from the previous quarter. The Fab 4 set a goal of 85% utilization. We fell just short of this goal, achieving an 83.5% utilization rate. As seen in the graph, we were on the verge of perfecting our changeover. We did an unbelievable job in quarter number 5 with a 94% utilization rate and dropped slightly this last quarter. We ended quarter number 6 with an 83% utilization rate. In conclusion, we have proven to the board that their investment was a wise one. The Fab 4 has been constantly profitable, generating a per quarter average of over $2.1 million in sales. In only 6 quarters, the company has generated over $3.9 million in net income. This success was a direct result of our sound business strategy. We did not take on unnecessary debt for a brand new company. We have a good mix of products and a high utilization rate. One of our company's strengths is our agility and nimbleness. By being very smart with our purchasing decisions and not having the constraint of excess capacity and the loan payments that come with it. This allowed the Fab 4 to change products quickly and, most importantly, profitably to meet the market's demands. Having just launched the business, we learned and improved along the way. Our management team is analyzing data from the past 6 quarters and looking at areas to strengthen and grow the brand. Both decreased setup time and increasing capacity are possibilities in the near future to help the Fab 4 grow sales and increase profitability. The Fab 4's management is confident that with our sound strategy coupled with tactical adjustments, this will propel us towards our ultimate goal of being recognized as the #1 brand for Muesli cereal in Germany. We appreciate the board's time and support. We have complete confidence in continued growth and profitability. Thank you, and we look forward to making you a lot of money. Fab 4, our story. Our company focused on being lean, nimble, and efficient. This allowed us to change our products quickly. We also considered other things, such as why didn't we increase capacity? Muesli market is very volatile driven by fluctuations of raw material cost as well as demand. Increasing capacity certainly enables us to produce more product, but if the customer demand patterns fluctuate, we run the risk of excess inventory. In addition, producing too many units could saturate the market and drive prices even lower. So in order to be successful in the long term in this market, it is important to be nimble like a cheetah and be able to quickly switch between products and produce exactly what the market needs. We would definitely consider in the future increasing capacity now that we have history on the market and also have been profitable and successful. Why did we have original and strawberry in the beginning and switch to nuts late? We made a good start by focusing on 2 products. Once we saw that the cost of strawberries had increased and nut muesli was selling well with good margins, we quickly switched to nuts. Investment in lowering setup time, which aligns with our strategy to be nimble, paid off. We'd also continue along that same path. We'd also buy the setup time down even further as more time goes on. One of the challenges we had is when strawberry skyrocketed, we did not hedge, so our margins would have been a lot smaller. In the future, we would hedge. But being nimble and efficient, it allowed us to switch our product very quickly. Our group learned a lot over the course of this class. We learned that you're only as strong as your weakest link. Things that we have learned from a business perspective is just how important it is to be ahead of the curve and to prepare for anything. One quarter we failed to order raw materials on time, and as a result, we weren't producing any product for a period of time. As a result, our utilization rate dropped below 80%. Certain things that we do differently, we need a better monitor raw materials more efficiently to ensure that we always have stock. Doing so will help us keep our utilization rate above our goal of 85%. As I'd mentioned earlier, if we're going to with dominating the strawberry market, we need to be proactive and hedge our purchasing of material. By doing so, it's going to allow us to maintain a competitive price as well as a high margin. We need to focus more on our marketing budget. This is an area that we kind of missed the boat on. If we had a chance to do it differently, we would put more into marketing each of our products. We also think that focusing on 2 products is the way to go to maximize our market share.